Hello everyone, welcome to this brief update on ICMA's consultation paper on the role of repo in green and sustainable finance. My name is Jan Chen and I'm Associate in the Market Practice and Regulatory Policy Department at ICMA. I will first introduce some of the ICMA's initiatives in the growing sustainable finance market and then move on to consider the role of repo in this context. ICMA plays a leading role in the development and stewardship of sustainable finance. It is at the forefront of the financial industry's contribution to the development of related standards. The Green Bond Principles, the Social Bond Principles, the Sustainability Bond Guidelines, and the Sustainability Linked Bond Principles have now become the leading framework globally for the issuance of sustainable bonds. These principles are currently used more than 95% of the international sustainable bond issuers, excluding China. ICMA is also actively involved in the international regulatory and policy dialogue on sustainability through its response to the regulatory consultations and its engagement in the policy fora. The transition to a sustainable global economy requires scaling up the financing of investments that provide environmental and social benefits. As the primary and secondary market for sustainable assets expand, related markets such as repo and collateral take on a more integral role in facilitating market development. ICMA's European Repo and Collateral Council, namely the ERCC, as the principal representative body of the European repo collateral market, not only recognizes the growing importance of this market, it embraces its responsibility in underpinning sustainable bond markets, enabling short-term financing and investment opportunities for green and social bonds, and ensuring fluidity of responsible collateral through the financial system. The paper aims to explore the potential intersection of the repo market and sustainable finance from three different aspects: repo with green sustainable collateral, repo with green and sustainable cash proceeds, and repo between the green and sustainable counterparties. All three types of intersections contribute to the broader sustainable finance agenda in their different way. Repo with green and sustainable collateral support liquidity for green and sustainable assets, provide a secure and flexible place to finance green and sustainable bonds. However, we acknowledge that this is not consistent with the existing market standards, such as the Green Bond Principles or the Green Loan Principles, where the cash proceeds should be used in the eligible green projects. We also have to be mindful of the risk of greenwashing. One point to note: although a repo with green collateral is unlikely to be considered as truly green because its lack of additionality to the overall environmental objective, it still fulfills the role of supporting liquidity and collateral fluidity and contribute to the development of a green finance market. The second type focuses on the cash proceeds. This is more in line with existing practice where the proceeds of cash are invested in green projects or activities. It injects real capital into the sustainable finance ecosystem, but we understand this type of repo is likely to be more bespoke and have longer-term structures, more like a securitized green loan. A question to consider here is whether the underlying securities also have to be green assets. The last type to be considered is repo transacted between green and sustainable counterparties, where the borrower's or lender's sustainability profile is the key. You can see it almost as a sustainability-linked repo. As a user engaging in green and sustainable repo, firms can gain benefit similar to other types of sustainable finance, such as improved reputation, transition of its business model from brown to green, and some first-mover advantages. Again, a key question we propose is whether it is reasonable to reconcile short-term financing, such as a repo, with the long-term nature of the green investment and therefore firms' overall green objective. The paper also covers potential risk and further considerations which are listed on the right-hand side of the slide. We re-emphasize on the risk of greenwashing, as mentioned earlier, and we also mentioned potential risk in other areas, such as collateral eligibility, collateral quality, documentation, data challenges, and operational cost. In terms of next step, we are planning to publish the consultation paper in the next 2 weeks after the AGM, and we will allow a period of 4 to 6 weeks for all interested stakeholders to come back with feedback. On the back of the response received, we may potentially put together a summary paper to identify areas of development. This will help us formulate an ERCC strategy in relation to the topic and establish a related working group if required. We may also collaborate with other relevant ICMA's committees from our sustainability department and assess the potential scope for any best practice going forward. Thank you all for listening.